Buckle up, Buttercup. You're going to want to listen to this in full. I've got an awesome interview with Collin Plume today. Collin Plume is the CEO of Noble Gold Investments, and we're going to break down what could be the perfect storm for precious metals, with war escalating in the Middle East between Iran and Israel, war with Russia and Ukraine, inflation is soaring, and the real estate market is showing signs of a serious bubble. People are asking, what now? Collin, a veteran metals expert and head of a company with an A-plus rating with the Better Business Bureau, shares insider insight on why silver is at a breaking point. Industrial demand is skyrocketing. The military, EVs, solar panels, and the tech sectors need silver, but supply is running thin. Could silver break $40 or even $50 this year? Collin explains why it's very possible. We also dive into why big banks are snapping up gold at near record levels and how gold is being positioned as a serious contender to the US dollar's reserve status. Plus, we discuss Robert Kiyosaki's urgent warning about a global debt collapse and why he sees civil war. He's also doubling down on gold, silver, and Bitcoin. Don't sleep on platinum. Collin explains why it's quietly outperforming expectations substantially. This is one of the most important conversations you'll hear this year. So let's go, ladies and gentlemen. When there's this much volatility in the markets, especially with metals, these are some of the best times to get into gold and silver. Now, there's obviously never any guarantees, so you follow what the big banks are doing. But if you convert your 401 or IRA, or if you open up a qualified IRA with Noble Gold Investments, they will give you a solid silver 10-ounce American flag bar. Give them a call, 1-877-646-5347 today, and check out noblegoldinvestments.com. Let them know Rex from Leak Project sent you. Get your copy of Silver is the New Oil, authored by Collin Plume. Excellent book. And let's get into the presentation right now. Hey, everybody. Rex Bear Leak Project. How the heck are you? Hope you're doing well. Hope you're prepared, not scared. The past few days, things have changed substantially. I'm shocked, but I'm not shocked with the bombing of Iran's nuclear facilities, getting the U.S. involved. It just seems like another scenario that could lead the U.S. into a long, drawn-out war. And I remember last time we got pulled into the Iraq war, that went on for years. There was a lot of financial problems that took place. The stock market had a lot of problems. Things eventually rebounded. But Collin, like, what do you see going on right now with everything? And I just read an article about how China's treasury is dumping a lot of the U.S. dollar. So the dollar dominance actually could be under siege.
Yeah, I mean, I think it's, anytime you have geopolitical tensions to this level, you're going to have a move in gold, and gold's reacted today, silver's reacted today. There's a flight to safety. I think this whole time we've been wondering, how far will this escalation go? And hopefully it's not an Iraq war. Hopefully it's not as drawn out as some of those things that we've been involved in, that, the whole early 2000s were, multifaceted wars and cost us a lot of money. And that's really the start of, in my opinion, is when the dollar started to collapse, was right pretty much after 9/11, and they dropped interest rates to a level that they've never done in history. That's when you started to see the value of the dollar really start to drop and the spending spree start to take off. So we're in a pickle now that we've dipped our toe into this, and I hope that we will be in a position where we don't lose any soldiers. And, I know there's a lot of areas, bases that we have, military bases, that Iran has said that they're going to potentially attack. And we do have a very strong military, so I hope nothing happens. But I do think in terms of the markets, these things make things a little bit jumpy, and people are nervous right now. And obviously the cost, the massive amount of cost. I think the missiles, what we're sending over, the B-2 bombers, we're talking billions and billions of dollars that we had to spend. And, obviously Iran is a bad actor. And if this, creates a situation where there's a new administration and their one carrot they've had this whole time is this potential to have a nuclear weapon, and it seems like we were able to destroy that one carrot. So I think you're going to see a domino effect there, and I think it's going to be in the end. I think it'll be positive for the U.S. and I think it'll be positive for the world to have them, in a less than ideal situation. But it's a rocky situation that we're in right now. We have still the tariff situation where we're dealing with. We have a potential war that we're getting into. And so the equity markets, I think, are still going to have a collapse in the next 2 to 3 months. I think we'll see a massive pullback. And I think a lot of it is still that things are still inflated in terms of where we are. And if you look at some of the stocks, NVIDIA and a lot of these companies, they're still trading at multiples we've never seen before. So I think there's going to be a lot more pain happening in the markets. And then you have the fight that Jerome Powell and Trump have been in. I mean, I think this is not going to go away. I think until Powell's out of office in February, I think this is going to be a constant battle that President Trump is going to deal with. And that if you look at actual true inflation, if you go to the website Trueflation, inflation is below 2%. And you would think in a less than 2% true inflation number that you would see interest rates start to lower. But Powell, again, a few days ago, decided to hold off on lowering interest rates. And that's, obviously devastating for the real estate market, devastating for the debt market. And so you have this real battle, this real pissing match between Jerome Powell and President Trump. And it's leading to a situation where it's affecting a lot of markets. A lot of these, you look around in real estate, if you look at Redfin and some of the big websites, there's never been more houses for sale today than in the history of any country. And so we're in a position where there's so many houses on the market. There's so little demand. Getting a loan is so difficult today. So we've really put the real estate market in a pickle. So if we don't get 100 basis points reduction, if we don't get any kind of pullback in rates, we're just going to see more and more homes hit the market and less buyers able to close and complete deals. So it's still a very, very fragmented and screwed up, real estate market and also equity market right now.
Yeah. And it blows me away. Like 5 years ago, you couldn't even touch a house out here in Pagosa Springs because once it hit the market, it sold. Like the housing market just buy. Prices went up like crazy. 5 years, 6, 7 years ago, you could get a nice house in Pagosa for $500,000. Now you're lucky to get anything for $500,000 in Pagosa, and there's so much available now. Like
yeah.
Every time I pull up, because I get real estate emails every day. I get multiple emails about the real estate out here in Pagosa, and they're continuing to drop prices now, but they're still way higher than they were 6 years ago, and nobody's buying out here.
Nobody's buying.
So I just don't know how the hell they're going to turn that around. And then, like you said, the interest rates, the situation with the interest rates, and didn't President Trump just leave some social media posts about Powell and about
absolutely. He's just constantly poking Powell and just saying that, he's an idiot and that he needs to lower rates, and he's just trying to do whatever he can. He's throwing rocks at him if he could. He's trying to get anything to wake him up to say, hey, we got to get rates lower because, people need to move homes and they want to get out of some of these homes. And because, the worst thing for this administration is that people just start walking away. And they just start letting homes go back to the banks. That's the scenario. Now, it could be great for the banks, in my opinion, but it's not great for the economy, right? And so you see a situation where he's like, we got to get rates down so we have more of a fluid market in the real estate market. And I think we will. I think they penciled in 2 rate drops. I think he'll drop rates at least 1 or 2 times this year. And then in February next year, my prediction is that anything that has a limited supply is going to go gangbusters because I think real estate will do well next year. But I think precious metals will also do well because I think they're going to push rates down. No matter what, whoever he gets in office, he's going to try to get the 30-year mortgage down in whatever way he can, creating incentives for the banks. He's going to do anything he can. And so I think we'll see a real estate boom next year. But in the meantime, what's happening on the ground is you have the two metals that we talk about the least, which is silver and platinum, really skyrocket. And if you look at silver right now, it's formed a 40-year cup and handle technical pattern. And so when you look at those cup and handle patterns, and if you pull up a chart, Rex, you'll see it. There's a lot of these. 1980 had a $50 cup and handle, 2011. And so if you look at where we're at today and you look at these kind of typical charts, you look at a scenario where silver's on a similar chart to what we hit in 2011 and what we hit in 1980. These are very common cup and handle charts. And so you're sitting in the $36 range for silver, but the demand is still skyrocketing. I mean, we're up 30% this year. And a lot of times when you see silver move that quickly, you run into a situation where you have some massive sell-offs, especially in the summertime that we're in right now. But what we're seeing is because there's such a high supply crisis, the deficit in last year for silver was 148 million ounces. They expect the cumulative shortfall over the next 40 years to be 678 million ounces of silver. So these are with, massive global mining happening. They're continuing to look to mine very profitable mining right now. So there's no shortage of effort being put in place with some of the biggest mines in the world. A lot of them in Mexico and different parts. We do some mining here in the U.S., but you're seeing just a dramatic amount of mining happening all over the world, and they just cannot keep up with demand. So you've seen silver up, 30% this year, and then you've seen platinum also close to 30% up this year. So the two big industrial metals, gold is more of a monetary metal than I would say an industrial metal, but the two big metals that have been, I would say, sleepy for a number of years have finally started to take off, and all the silver bugs are happy. And we're seeing at Noble, we're seeing a pretty high amount of clients jumping into the market buying platinum. Platinum is interesting when you buy it physically, in that there's not that many coins and bars available on the market because it is the most rare of those precious metals. So it's harder to mine platinum than it is palladium, and it's harder to mine than silver. It's harder to mine than gold. So you're seeing it really start to take off. So people that have been acquiring platinum and saying, wow, was it sitting at $950 an ounce? They're finally starting to see it move up. And I think it's trading in the low 1300s now, about 6 months later. So that's a pretty big move for an industrial metal. And I still think we're pretty early in terms of where it's at. But yeah, a lot of our clients are buying physical platinum and then obviously buying a lot of silver.
So as far as the silver and the military, is there a direct connection with the amount of silver that we have and military industry?
Yeah. So the military uses it obviously in drones. They use it in a lot of their technology. Last year, the U.S. military and the government bought about $400 million in silver. I expect with what's happening now to see an increase in that because, obviously we're using a tremendous amount of weapons that we've never used. Those bombs that we used in Iran and we've never used those. So I think we're going to need, the demand will continue to skyrocket. And that's why I've, predicted definitely silver breaking 40 this year. I think is very likely scenario. And it's creating these new floors. That's the thing is when it hit, in the high 20s early into COVID, it really sort of kind of trickled down in the mid 20s and you didn't really see that move. But now I think what it's done is it's created a new floor. That $30 level is kind of gone. And I think now we're going to create a new one at 40. And it reminds me a lot of what happened to gold. Because I remember when gold was teetering in the 2000 range, we were wondering when that breakout's going to happen. And now obviously it's well above 3,000, closer to 4,000. So I think silver's kind of increased to a point where that $30 level is kind of gone. And now it's going to teeter up to 40. And I think it'll bridge between 38 and 42, 43 for a while. unless we see any kind of escalation that goes more serious. And then I think it could go even higher and maybe potentially break that 50. I don't think it breaks 50 this year, but I do think that it'll break 40 this year. And it's right in line with my book. Actually, in my book, I talk about my price expectations. And I actually have silver sitting in the $36 to $37 range right around this time. And then I predict that it's going to hit. And then my number for silver over the next 2 to 3 years is sitting at 56 or $57 an ounce. So I think it'll break that, and that would be a pretty significant gain from where it is today. And it's really just based on supply and demand. It's not rocket science. I mean, this metal is used in so many industries. The technology that we need it in is ever growing. And then you obviously have just the massive amount of solar panels that need silver. And that the solar panel usage alone accounts for about 7% of all the silver usage today. And everybody just continues to add more and more solar panels. So I think that's going to happen in the US and obviously worldwide.
So when you said that we're still like majorly, we could see a major deficit in silver that we need.
Yeah.
Like how does that work exactly? If we need that much more silver, do we have to halt certain productions of certain products and industries, or like?
Well, it typically with this kind of shortage that you have, you just see the industries that need it more will pay more. That's typically what you'll see happen. And some industries will just, have maybe some of the jewelry industry will have a little bit of a slowdown. They won't use it as much. They'll try to use some other metal. But yeah, I mean, I've seen it many times with industrial metals, and we're seeing it right now with gold. Like, gold is at a point now for jewelry that it's in some ways too expensive for some of the jewelry that people are producing. So they're trying to use other metals. So I think what'll end up happening is, yeah, you'll see the shortage, you'll see the price continue to go up, and then you'll see the industry, like obviously the government and the military is going to have it. So they're going to pay whatever price they can. I saw it during COVID that COMEX needed silver bars. They were willing to play. I mean, they were paying like 40 or 50% above the spot price just to get silver during COVID. Because they had to have it because they were selling contracts. So you're just going to see the industries that can pay more will pay, and that'll just continue to ride the price up. But yeah, I mean, solar panels they can't live without it. They're going to use it. So you're just going to see some of these industries continue to pay more because obviously they believe that even at $40 or $42 or $45, it's still necessary. So they'll just continue to pay above the market to get the silver that they need.
And isn't that remarkable? It's just gone up so much over the past couple of years, and like you said, these new floors are most likely being created. I wonder, like, this is something that's been on my mind, and I'm really glad you're here because I wanted to ask you this. Let's say that conflict gets worse in Iran and Israel, and somehow the U.S. gets involved more, where we have to send out a ton of troops, and maybe something happens here. Like heaven forbid, I certainly hope not. But if there's a terrorist attack here in the States, I know that there's a multitude of major cities right now that are under warning because of the attacks in Iran. I was reading, major U.S. cities on high alert after U.S. strikes Iran.
Yeah, absolutely.
So like, do you see the trends? People kind of building up their metal banks more, and maybe pulling some out of their cash out of the banks.
Absolutely. Yeah, no, and I think it's a combination of things. One, they need to keep up with inflation, right? They need to keep up with the cost of goods. Two, it's just they feel more comfortable. I mean, I can't even tell you how many times I've had clients say, I just feel better having gold and silver in my hand in my safe at home, and just having that wealth close by. But if you look at what happened during the last kind of major escalations that we had in the 2001 to 2008, 9 range. Anytime you saw any skirmishes, break out, you saw gold and silver do well. And that was really the last massive bull run that we saw, right? It was 2001 to 2011. And I think we're in the middle of a very similar bull run that started, in 2020. I think we're in the, middle part of the next bull run that we're seeing. And if we are going to see a 10-year bull run like we saw in 2011, then, gold price, is definitely going to creep into the $4,000 and $5,000 range. And then I think you can make a strong argument that silver would be in the high 50s, $60 range. I mean, some people think $100, $150 an ounce silver. I've seen those reports in different places. But yeah, I mean, to go back to what you were saying before, is the more shortages you have, the more escalations you have, the more people are going to want to get into safety investments, and that's going to be great. Great for gold. And I think this summer's been quite unique. And usually the summer's a little bit slower for us, but actually we've seen a pretty big uptick this summer. I think more people are sort of staying closer to home. They're definitely concerned about things, and they're watching their investments a little bit closer than they have in the summer in the past. There was always this like sell in May and go away in the stock market. But right now, I think people are like literally on the ground kind of watching things, and they're looking for opportunities. There's been some talk of oil, if they do anything with any of the oil and a lot of the oil straits that they deal with in Iran, if they pull back on oil sales, that we could see oil break 100. I've even seen it, people said it could potentially double. So there's a lot of these things that people need day to day that are in flux, and I think the markets are going to react pretty steadily to these things.
And what about, I read an article, System Breakdown, Why Bonds, Barrels, and Bombs Are All Under Attack.
Mm-hmm.
What's your take on that?
Yeah, I mean, I think, bonds have been under attack for many years. I think you're looking at a situation where, when you see gold up 25 to 28%, bonds at, 4 and 5% just don't make sense, kind of long term. I don't think you're seeing a lot of the big investors, but the concern about, the bond market that's happened over the last few times that they've released bonds is just there's no buyers. I mean, that's really the reason that you're seeing bonds continue to go up in price, is that the Fed releases bonds, and your typical big buyers, your funds and your Chinas and all these people that usually would come to the table and gobble these up, they're just not buying them. So that's why you're seeing the prices go up. I don't think it's because there's like, this is a great return or a great, product. People are definitely diversifying out of those assets right now. And, we've seen a lot of uptick, and we've seen a lot of, family office money that's more conservative contact us, like investors that are just really just worried about the downside, and they're just getting into precious metals to protect themselves. So I think we're seeing precious metals has become, gold and silver are no longer an alternative asset. I think they become mainstay investments for most portfolios. So that transition's definitely happened over the last few years. I think definitely since COVID, we've seen gold and silver become, a priority asset for most people's portfolios.
Do you keep track of, do you ever watch Rich Dad, Poor Dad?
Yeah.
He's been saying lately that he thinks we're already at civil war. Mm-hmm. And he's saying buy gold, buy silver, buy Bitcoin.
Yeah.
I'm like,
wow. I think, I mean, he's been, interestingly enough, a guy that's, successful business owner, successful writer, someone that, has no reason to be as nervous as the regular person, right? I mean, he's a wealthy, it doesn't matter what happens to the world, like he's going to be fine. And he's a heavy investor in gold mines and silver and physical silver. So I think, you see these kind of people that, really don't have to be so conservative, and yet they are pushing for precious metals. They just believe strongly in it. And smart people that study currency believe that our dollar is continuing to be in jeopardy. And this currency reset has been a topic for many years, but I think it's something that actually people believe can happen now. So so Kiyosaki's been, a big proponent of gold and silver and in real estate, but I think recently more gold and silver than even real estate. Just because, with these rates, I don't think interest rates is I think it's a little bit of a scary investor for the everyday person, because if you can't hold real estate for 10, 15, or 20 years, you're always susceptible to selling in a down market. And I think that's where people are right now. Obviously, we're talking about so many houses, so many properties on the market. These people don't have the ability to wait. They have to sell now. And they're going to sell at a discount from when they bought those properties, unless they bought them, 10 years ago plus. And so that's why, the real estate market it's a game where you have to be in it for the long term. And that's why I think he's been pushing heavier on precious metals.
Yeah. Yeah. I thought that was really interesting. Another really cool article that I saw that just came out about a week ago from Wall Street Journal. Gold is the real rival to the dollar's reserve status. Central banks snapped up gold at a record pace last year, putting the safe haven metal ahead of the euro as the second most popular reserve.
Yeah.
That's pretty cool.
Yeah, it makes sense. And again, I'll end with this because, I know, people are looking. We have a gold and silver guide. We have a silver guide. We have a platinum guide that we just finished. Now is a great time for people to get educated on these things and to learn and talk to real people. Call us, go to, Rex's link, learn about if you haven't done it, if you don't have any, or maybe you don't feel like you have enough precious metals, like definitely give us a call and let us go through what we do and talk about it. And, we can go through the charts and you can see what's actually happening. Cause I think people are going to be pretty surprised by some of the returns they've seen in precious metals. But if you're looking for an expert, someone that really is doing this every day, definitely call us. Obviously, we've been on Rex's show for 8 years now, and he's over that 8 years, we've seen some pretty unbelievable gains in the precious metals market. But for anybody that's new and they thought about it, or you have an old 401k or an IRA. Definitely give us a call. We'd love to educate you, send you some good information, no pressure environment. And you can learn from people that are really the experts. And it's not a fund. We don't make, a lot of people are like, oh, they make these annual fees. We don't make annual fees. You buy metals from us and that's it. It's yours. So if you do like some cost analysis too, people are quite surprised in the IRA, how affordable a gold IRA is relative to some of the other things. Because a lot of times people don't realize, like when you have a broker, you're paying them a fee. And then if you have a mutual fund, you're paying them a fee. You could be I've seen people paying 3 or 4% in annual fees to some of these people out there. And that's pretty tough to overcome. With us, you just pay when you buy the metals and that's it. So if anybody's looking to learn and get some of this information from us, definitely check out Noble Gold Investments. Mention that you heard about us on the Leak Show, and we'll walk you through it, give you some good information, and ultimately you'll decide if it's something that's for you.
Right on. Oh yeah, and before we finish up, my friends Mike and Kim wanted me to say thank you because they bought a bunch of gold from you, and they said that when they did it, you shipped it out to them. They were kind of nervous because it was a pretty big order, and they got it, and they were super happy, and so they wanted me to personally relay that, say thank you. So, thank you.
And, thank you. Yeah, and thank you. Yeah. Thank you to them. Thank you for being customers, and we appreciate every customer, and I love hearing those stories when people receive their metals and they're happy. So that's good to hear.
They're pretty cool, man. They've got a place out here in Pagosa. They also have a place in Florida, and they come out here in the winter to visit.
Huh, interesting. Wow.
They like the snow. So anyway, yeah, I thought that was pretty cool. I really appreciate it. Thank you, Collin. I hope you have a beautiful day. It sounds like business is good. And keep being the change the world needs to see. I appreciate your time. Thank you.
Thanks, Rex.